Hey, what is up? What is going on, my peoples? Hope everybody's doing well today. It is a beautiful day in the neighborhood. Would you guys be my neighbor? Of course you would. I don't know if you guys been watching all those new AI, Mr. Rogers, and like Eazy-E, Snoop Dogg. He's got a few with Tupac, but those have been cracking me up. I'm like dying on this stuff. So, anyways. Absolutely, absolutely. All right, guys, we got some cool. Yes, sir. Alrighty, guys. So, just jump right into it here real quick for Bitcoin. Um, so we've been watching some really interesting stuff happen. We talked about it coming down to this liquidity area. I was expecting us to potentially come down even further, but it looks like it is going to be an up week potentially. So like I said, we sold off from we started going down. This was my little area here. I actually last night after the show jumped on a few other shows and I was talking about, or I basically just typed it in where the price points was going to be. Basically hitting that 108 to that 107.50 or 107.58, 107.508. Wow, that was really hard for me to say. I'm right here in this level here. So watching it come down into our area here and then seeing it kind of come up. We're seeing good volume come in from the previous days, as you guys can see. Look at this, we're seeing an increase in volume coming in. It's gonna be really interesting to see how we finish. If we can get above the average of Bitcoin being traded, this is gonna be a big deal. Very, very big deal. So we're watching, waiting, and seeing what's happening here. But more importantly, as we're actually pushing up here, we've got these moving average sitting above us here, and how we interact, how Bitcoin interacts with it as it comes off, hitting this area is going to be an interesting thing. One, because if we sell off and then we see it still in green, that's going to be an indication that this will continue to go higher. And you can see here over the last 2 hours since the open, you've seen people really starting to buy here. And this is institutional buying here coming in. So I'm kind of expecting to see some big pushing here. Basically, if you see them buy at a low area or a major sell-off, and then we see it come back in, this is what you want to see. This is the type of movie you see come down, test the lows here into the demand zones, right? We talk about in the evening, if it opens up and we see it come down first, well, it will most likely end up green at the end of the day. And that's what we're watching. Now we're coming up to the 50 period moving average, to the 100 period moving average, the 20 period moving average right here. So all these moving averages are one of those things that basically just saying, hey, we're not really on right now, but if it hits us, we'll at least going to have some form of resistance. So how far is it going to go down? I'm pretty sure if it does come down, it's probably going to come back down to that 108.74 area, to that 107.508 area. So kind of expect something like this. Boom, push up, come back down. The next day, go up, come back down to hit this area here. And then to see it continue up higher as we start to touch that 125 to the 130 area. Now I've talked about this idea of where are we at in the monthly scheme of things, right? And we're actually at a good point here now, where we're watching the market literally, it went up to go, or it went down to go, actually, it went up to go down to go up. So that's what it was, up to go down to go up. And so this is what we're watching in movement. So I'm expecting to see this market move higher here. I would love to see this week go green and next week go green. That would be the best thing. Honestly, like let's go, right? See us hit the peak highs up here to that 130. And then from there, finish off the year with another down then up movement here. So that's kind of like what I'm expecting here. In additionally to that, I'm also kind of waiting and seeing what's actually going to happen overall with China and seeing how they're actually playing the opposite end now. They are accumulating gold like it's a bad habit. I mean, it's getting to a point where they're just any type of gold that they can get. Also, they're trying to circumvent the dollar by going through and, well, collecting gold so they can become the gold standard again and circumvent the fiat system. And Trump is out there circumventing the whole entire Fed system by basically going to crypto. So it's a really interesting circumstance that we see in today's play in this economy. We will look back in time at this period and go, dang, we lived through this and we were at the forefront, literally shooting, like we were in the middle of that battle on the crypto side. So it's going to be actually really cool as we see. So basically what I'm expecting to see is when it comes to this weekly chart, we should continue higher. And we've already sold off here by coming up and tapping this. I'm not saying it's going to just, we're coming up into this. We should see a bit of a sell-off off of this, come back down, and then see it continue. You can see here that the week chart here is playing. You can see here we're coming and testing this here. So I'm expecting to see Bitcoin continue higher from this moment on, just simply because, well, these are weak. These moving averages are basically really non-existent, and so we're going to have a bit of a, like I said, a bit of a retracement off of it. But I don't expect us to see it sell off and then go up. But as I'm looking at the weekly volume here, we're about 1/3 of the week from Saturday, and so I'm thinking 1, 2, 3. We should end above last week's volume with buyers is what I'm expecting. The only thing that could stop us is literally, if I'm honest, if I'm looking at this, institutions, from an institutional fundamental standpoint, something would have to come in to turn us around. And that kind of might happen. I mean, I've heard the institutions have not got enough of the Bitcoin that they wanted. And so they may come up with something that could change things around, maybe a news event or something like that, might turn the market around here as well. So we want to be careful for that. Alrighty, here we go. Oh, there we are. Whoop, whoop. There we go. Don't need help. This happened. No. I just don't understand why that's happened. That's really interesting. Okay, what's up, guys? Now we're up to 2. I don't see anybody here right now. That's really interesting. Let's see here real quick. Can check some socials here. See if we can draw the algorithm to kick up some of the viewers. Alrighty, here we go. Boom. So right now, looking at this market as we see, I've got a few things that I'm a little nervous about. Literally, I wouldn't call it nervous, but like if banks are not done getting what they want, they will suppress the market. That is one thing that I have seen multiple times. So we could see that. I just don't expect them to. At least like this time around, like I think they're gonna let it push up simply because we hit this liquidity area. And then when we hit this liquidity area, you can see here that it's, there we go. That's interesting. You can see right here that, like, from a daily standpoint, we're not seeing a ton of volume coming in, but I am seeing price movement happen. And we are seeing, as we're moving, we're seeing some demand wicks as we're coming up. So you can see here, demand wick, demand wick, demand wick. And while we're pushing, so we're seeing pressure pushing up. I just, now that I'm really looking at it from your guys' perspective, it might come back down. Dang it. I'm looking at this right now. No, I mean, like I said, expected to see it come back down, at least come and test this area here. If we do come and test that area here, then from there, we want to see more volume coming in and see just that pickup in volume. Kind of like this is what we want to see. But we'll see as we start to, as we continue update here. That's pretty much it. Let's go into Technical Tuesday, and then we will move forward here. Give me 1 second. Tom, you want to cue the music for Technical Tuesday? All right. Awesome. Alrighty, guys. So we've got a lot of stuff kind of going on here right now. Really, the week. So I'm basically wondering, are we going to see the markets crash, or are we going to see the markets explode? There's a lot of news actually happening right now with China basically de-dollarizing and a lot of the BRIC nations de-dollarizing. And Tom has hit a good point, basically saying, hey, guess what? You guys may have a great system, but nobody trusts you. And then, so I was perusing through, and I noticed that China, and we've talked about this, China has been accumulating gold, like I said, like it's a bad habit. Like they're just running to it like a traumatized girl to an abusive man. It's real. They are doing it. And the reason why I say this is because they are, in doing that, they've also set up a system where within their system, being BRICS, Tom has talked about how nobody can really trust them. And so what they've done is done an old school style of basically creating gold reserves around Asia where you can actually come in, put your money in it or your gold deposit, and then in doing that, it's a decentralized area, and then you can pull your gold out. You can put your gold in it, and this is now popping up all over Asia, Africa, and a couple other places throughout the world. And what's interesting is that it's starting to get some adoption. And additionally to that, because the way they set this up, they've been able to basically, people can take loans against it in an old-fashioned ledger system. And because of it, the classification for gold has changed in the sense that you can now, with the modern technology and how we can actually be able to detect gold and where it sits and how it sits and how it's moving, we can know if it's really there or not. And it was really interesting to sit there and hear some of this rhetoric. And I'm actually going to bring up a new guy. So I've been kind of following a few other new people, and so I want to bring them up because, I think just to give us different perspectives in the market, right? I think what's really important. To just simply stay in one mindset, I think is wrong. You want to be able to hear multiple point of views, and so I'm always looking for different point of views and then trying to synthesize. And one of the things that I was watching was this guy, or not just the guy, but multiple people. But this guy kind of stood out to me because he was really, it made complete sense. Like I said, then I was like, oh, he's right. So give me 1 second as I pull this up here, because I want to, this will change a little bit about what I'm looking at the market. We are, so the guy's name is Herlihy, which I don't know even how to pronounce his name, but I'm going to pull it up here because this is the guy. I want you guys to check it out right here. This is his name. Come on, boom. This is his name right here. Go check him out. He's been going over some stuff, and I think what he's talking about has it really, he's logical. It's very logical the way he explains it. And then the other guy I want to bring up for you guys here is another guy. Give me 1 second as I pull him up here. His name is Mark Disruptor. Mark the Disruptor here. Was just this guy here. Mark Disruptor, Market Disruptor, and Mark Moss is his name. So check him out. And he kind of goes into a lot of cool stuff. So that's about in a nutshell there. And we will check out the charts here now. Give me 1 second. Boom. All right. So if we look at with the discussion that we talked about yesterday, that, or actually you guys weren't there, the market that we were talking about is, or the things that we were talking about yesterday was that I misunderstood kind of like the what's actually falling. I used to think that it was the markets that were going to fall, and when I realized that, or when I realized that I was wrong, that that's not the crash. The crash is actually the U.S. dollar and the trust behind it. And so because of that, people have actually been pulling away from the dollar, because what happened with what we did with Russia when Biden was basically he was president, and we seized Russia's like I think it was $500 billion, and in that, the rest of the world was like, wait, what? Like they put their money into your system in a safe, and you seized it, and you didn't give it back to them. And so that pretty much scared the rest of the world that if you piss off America and you do things that we don't like, we're just going to seize your money. So the rest of the world just basically said, yeah, we're not with that. We're not necessarily the rest of the world, but a lot of the BRIC nations basically said we're not going to correlate and be cool with that, and go along with their system. So they've been trying to figure out a way to get around it, and they kind of have already through what China's doing right now. And so if you go watch that, a few of those videos that I just showed, they explain that kind of in detail, but I'm looking at the market a little bit different now. With that said, with the US dollar going down and a lot of nations around the world losing trust in the USD, that means that the USD, and the way I put it was like this: imagine you have the world, okay? And assets, stocks, businesses, commodities, gold, silver, fruit, things that you eat, things that are tangible. You buy them with dollars, right? And those are commodities, those are assets, right? Some are just basic utilities, and others are, houses that you need to live in. And so those things hold value no matter what. Now, what's interesting is this, is I was expecting that stuff to sell off, right? Because the market was overvalued. But then what happened when I realized, no, because people are losing trust in the US dollar, the US dollar is dropping. And so many of our Trumpian trades that we talked about at the beginning of the year during the actual Trump inauguration, if you guys want to go check it out, it's a 6-hour thing, but in it I lay out the market sentiment, what I expect throughout the next year. And so that was in January, and I was explaining how we would watch, the ES shoot up and then come back down, or the S&P 500, and then watching what would happen with the NQ. And back here in April, we had actually saw the sell off. So we saw the push up, the sell off, and I remember I was expecting a sell off to at $10,000, the low of during COVID low. And it's right here, April, right here. 22, the low of 22, the 10,000 mark area here. But then not realizing that I misunderstood the metrics of this play. Now, because I can read charts, I can say market's going down, let's get in on it, right? But from a global standpoint, looking at the market and from what's actually happening, the way I'm going to put this is like this. Now, let's say the world, you have the land, right? The land is assets. And the C is, let's say, dollars, okay? And so when there's an influx of dollars, right, that means there's circulation of dollars, which we see the C rise. And then what happens is the land itself kind of shrinks, okay? And then when you have that circulation happening, then assets, typically, they will, when you see an increase in assets, when you see an increase in dollars, assets basically kind of not shrink, that's the wrong word to use, but they just stay stagnant in their value because everybody's trading it, okay? And in the same sense, you have normal returns. When you have a US market that when you have a less circulated dollar, and when that happens, you typically will have inflation because you don't see a huge push within the market going up and going down. The market would typically kind of sell off when that happens. But also more important, when this also happens, you also have a form of inflation. That inflation will cause prices to go up. So as the US dollar, in this scenario, you have the world, assets are the actual land, and then the dollar itself is the C. When the C pulls back, the value of assets go up in a sense, because it's not in relationship to the land themselves, but in relationship to the C. As it's descending and coming down, the value of the assets stays stagnant, but in relationship to the USD, it actually goes up because the USD is coming down. So it's important to understand that metric. And so and that is worldwide, because we are the world's reserve. And so when this is happening, right, that acts as a form of inflation. Because if I'm working in America or based off of something in the world, and the money that I'm making, and the value that I'm pulling off, or the value that I'm getting paid in is USD, I can't buy as much of what I want, because literally the C is going down, but the value of my assets are still here. And so I'm still trying to work out that analogy just to make it simpler. But that's a good way of explaining, is that the C of the US dollar is coming down while assets, the land, are just staying stagnant. And so your dollar can buy less of the actual market. And so when dollars are printed, you're basically adding to that deceleration of USD. Okay, so it's going to be real interesting to see what happens here. Now, with that said, my view on the market here has changed a little. I'm still going to read it, but I'm going to be more bullish than I have been than bearish of a sell-off coming off, because literally the metric around the world is changing. And because of that, I would expect to see just a lot more volatility, but ultimately businesses, assets, gold, silver, food, it's all going to go up. And that's the main reason why. It's because the underlying value of it, or the underlying payment value, is basically decreasing. All right, so all that's to say is, let's check out the world ETF here, which is the URTH here. It basically is a conglomeration of all of the world's ETF, all of the world's stocks kind of put into one, and so you can actually run things here. Now, one thing I want to say here is I'm expecting us to see a bit of a sell-off for the week. You can see here we gapped up and we're starting to come down, so I would expect us to come back.
Hey, can you hear me? Hello? Yeah. Can you hear me? For whatever reason, my internet has dropped again, and it has nothing to do with my modem, but it looks like the actual internet itself. Let's try this again, because come on. Coming off fine. Yeah. Restart.
Alrighty. Okay. Alrighty. Okay. Can you guys hear me good? What is happening? Okay. All right. For whatever reason, this is not wanting to help. All right, here we go. Okay, so what I was saying was this iShare is what I'm expecting. When you look at this, this is the world ETF, and the symbol is URTH. What I was saying is, on a monthly scale, we came down here, we put a pretty decent amount wick here as the sell-off came in. And you can see here, if we close this month up at this higher level, like what we've been seeing, that means expect prices to continue to sell, or expect prices to go up. But the only thing I'm expecting also, because this is a 3-month candle, come on, please don't die on me again. Here we are. When you look at the wick, it's still a fairly small wick. So on the back end, if we start to show a bunch of volume as we're pushing up in the next 3 months into next month, continue to go higher. But if we're watching volume kind of die off, then I would expect to see it really kind of to see it pull back. But to throw this out is we're barely finishing off the month of October here, and you can already see, if you look at the 3-month volumes here, you can see that people are definitely stepping in. I mean, we're already past the halfway mark of this 3-month mark here, and we're still on the 1/3 of it. So I'm expecting that we're not even close to the 1/3. I mean, in all honesty, or I guess halfway. We're halfway through the 1/3 part. So, maybe on a scale of 1 to 10 here, we're at a 2. So, it's still got some movement here that it can push. And the fact is that the volume here is still so, it's at a high level. So that's why I'm expecting this to continue higher into next month. And so that means that we would expect to see the S&P 500 push as well. Keep pushing higher, because again, jumping back to what we were saying earlier about, and also guys, let me know what you guys heard from earlier, before I kind of died off. It'd be cool to let me know if you heard the whole entire thing. Let me go ahead and put this here real quick. this here real quick. All right, guys. So from the S&P 500 down to the NASDAQ, I expect this to continue higher. Primarily, even if we have major sell-offs, because of just how it's being turned. Basically, the assets are becoming the leverage, basically becoming gold, or it's becoming real assets again, versus the US dollar being the asset in which you buy these stocks. So if every time we pull back down to, you can see here that 50 period moving average, as we've been playing off of this, you can see here that it's been holding. So I'm looking at two areas here. I'm looking at the 50 as well as the 100 when it comes back to pull back. I doubt that we'll get down to that 6104, but where the 200 period moving average, but I think seeing a pullback down to that 50 and or that 6415 area is a good area on your stocks if it decides it wants to sell off. So be paying attention to that. They're trying to sell it off today. You can see we're in I'll point this out here real quick. Actually, so this is where we're at right now. We're actually sitting in a liquidity area. See here, and then we are sitting also in a supply zone area right above us. This is where we're playing here right now. So this liquidity area right here, that's weird that just did that. So this is kind of like why we're playing here. It's just the liquidity area here. And then we're also playing in the supply here, pulling back. But you can see in the smaller time frames that there are a lot of demand wicks, not really any supply wicks. So we're pulling back to go up. We don't really have any demand wicks here. So if we fall below this liquidity area at that, let me make sure you can see this. At this area right here. So if we fall below the 67.62, I would expect us to come back down into that 67.18 area as a liquidity area. So kind of expecting that right here at this level if we do fall below here, but it's showing strength to the upside though. And so this is where it's kind of, if you want to first wait and see if it's going to continue down, where you see volume step in below that liquidity point of 67.62. The other part here as well is when you're looking at this market, because volatility is going to allow people to get into their positions, expect volatility, big moves, bigger moves. I mean, we're talking, I think we're coming up into an environment where we'll see 2, 3, 4% moves in a day, like normal, like that will become normal here, coming here real quick, just because people are trying to get in, people are trying to get out. And it's basically a crowded trade here. Speaking of crowded trades, and gold has been a crowded trade. So, but before we get to that, let's check out the bonds here real quick. Bonds here, the one month here, we actually just saw kind of like a fall through this liquidity area around that 408 area, 48% area. And the next level, if we continue down, which will be just kind of a hard push, is going to be that 350 area. And so this is it should look something kind of like this, right? Wait a second. it should look something kind of like this here. Just kind of that drop, bounce up, drop, right? We'll see something similar to that right here. See it kind of drop, that type of movement, come back up. And especially with everything that's going around, basically with all the job losses. I remember watching the energy sector lay off. People are already, ConocoPhillips, Chevron, all the energy sector corporate entities are laying workers off. And so because of that, that means that they're expecting a slowdown in the economy. And so they're not gonna keep paying people, right? Slow down in the economy is because you're not gonna have all the trucks driving, shipping goods and services, which means that people aren't buying things. Why aren't they buying it? Because people don't have jobs, because all the job information or job reports that have come out over the past 3-4 years have been, which I've been screaming for the last 2.5-3 years here, they're all false, they're lying. And we've gone through a lot of the metrics behind the reason why they are. But again, that in itself is going to cause the market to sell off, right? And in particular, what Powell's going to have to do is to stimulate the economy is literally lower interest rates. I've already talked about last week that interest rates are a healthy, strong economy tool. But if you don't have jobs, well, that means that people aren't going to be able to buy. No matter how much you lower interest rates, we're not going to see an economy that gets jump started. What you have to do is open up lending to small businesses and give grace, honestly. And as those small businesses hire individuals, those people will then start buying things. And then what happens as they buy things in large corporate entities as well as small businesses. And then it stimulates the small company, or the small company stimulates the large companies, hence then also helping the small companies as well, right? It's kind of a cycle that correlates here. And right now, kind of not seeing that. And so it's going to be really interesting to see how Powell handles this, and also who Trump brings in. We know that Powell's tenure is slowing down here. We're not slowing down, but ending here. And so I would expect to see him go ahead and, for lack of a better word, I just hope he plays by Trump's, game plan, because he's the one in charge here right now. And honestly, because he set things up in a certain way, it's kind of, you've kind of got to follow that guy's plan here, at least as of right now. And so I expect to see the markets here for the 1 month yield here to come back down, which basically is going to cause everything else to come down. We can go to the 10-year yield. We're already watching the sell-off happening down at that 384 area here. So I'm expecting to see this type of move actually happen again. The key point is this, is as we see it come down into this level here for that 375 area here for the 10-year yield, I would expect to see at least a bump, right? We should see some bump. People should start to buy some houses at these levels with low interest rates like that. So I would expect a bump in the economy, which will basically draw some businesses to start hiring people. But I don't think we're going to see much of it until we actually get much lower here. I think realistically see a interest rate of 3%, 325, 3% here in the next year. And so I think people are going to hold off on that money, and they're going to wait until they can buy interest rates. And the other part behind it as well as this is, as people are being laid off, a lot of supply of houses are going to go on the market. And so that again is going to drop the housing market and allow Generation Y and also Generation Z. I believe Generation Z is 19. I think they're 19, right? 1918. So you'll see some entrepreneurs try to jump in that game and try to get that up and running. So it's gonna be really interesting to see what happens. But yeah, I expect to see a 10-year yield by the end of the year. I mean, sub, 3.25 or even 3%. So it's gonna be really interesting to see. Let's check out here real quick on our bonds. Check out bonds 10-year. We've talked about the 10-year now since Trump's inauguration down at these lower levels here. Said expect it to get closer to these higher levels here of going to be that 121, that 122 area. Now, obviously, we've talked ad nauseum about we've talked about the stable coin and how the stable coin system works. And so people right now are watching the stable coin act really kind of take into effect. People are now starting to buy treasuries, and they're going through and they're buying short-term and long-term. And Bassett said, listen, if you're going to buy, we'd rather you guys buy long-term debt, which is kind of interesting, right? Short-term and long-term, but they're going to layer that debt out. And as you buy a stable coin, you're going to be buying a crypto asset that correlates with that, right? You just don't, unless you're just looking just to get yield, but most people want to get yield and get part of stable coins, or get part of normal like asset coins. They want to see capital appreciation. So look at a lot of these as it's say mid-cap coins or mid-cap coins that allow you to have a good asset appreciation with yield to it. So they'll give you 5%, 5 to 8% off of your money by staking. In additionally to that, they would also give you asset appreciation potentially of maybe 200-300%, if not much higher than that. If we're talking some of these coins like DOT, DOT had a huge sell-off, and we're going to go into that later today. But these are one of the things I'm expecting to see really happen here as we start to follow this trend line here. Now, last week we were looking at the 10-year, and I said I'd expect us to come and push up and pull back to the 8-period moving average and then see it continue up. Well, it just slowed down its progression here, and you can see here we came and tapped it yesterday, and then now we're just starting to see it continue up. The next resistance level is going to be, I believe, the weekly. The weekly. No, I think it's the month then. Yeah, this is the month. This is the monthly 50 period. Now, this is going to act as a decent resistance here. But the key point here is to point out is that as we come up to it, again, I would expect it to play off of that 8-period moving average as we can see it go higher. And so which one is it most likely going to play off? I think we'll see it play off of the daily as it pulls back, or potentially that weekly. So as we come up into these higher levels, we'll come back down and play off the 8. So we want to stay above the 8 on the daily and on the weekly for us to stay long here. All right. And so like I said, just be prepared for that resistance at that 114, 195 area. Now that's on the 10-year. Let's check out here real quick what's happening here with Russia here. Russia has had some good news in regards to their economy, right? Just simply saying that they're trying to connect with China, and they're trying to help. It's trying to build the BRICS nations gold reserve and what they're trying to do there. And so they've got a decent amount of mining that's actually happening with them. And it's going to be really interesting to see what happens there. But ultimately, I would say, just so you can be well diverse in your portfolio, pick up some of this ETF, which is basically the IRUS, right? And so if we see a huge explosion in Russia, and I know, like, especially if you're like American centric, like I get it, absolutely, like you want to buy American, but we We're adding $1 trillion to the debt. Next year, it's going to be 1.1 trillion, 1.2 trillion. You know, and over the next 10 years, we're going to see it escalate to the point. I think it was last week when I was talking about the escalation of the U.S. debt being back in the, you know, early 2000s. It was $1 trillion, right? Every, you know, I think it was like every 2 years. And then it was $1 trillion every year in the 2010s. And now it's $1 trillion literally every single 100 days. So you can see how we're adding trillions of dollars in debt and how it's escalating to a point where over the next 10 years, we should be adding on $1 trillion onto the debt. And I'm not exaggerating when I say this, on a monthly basis. And is the world going to be willing to back that up, right? So this is why I'm saying, be smart. If the market does, if we aren't on top, it's good to have Russian assets, right? As well as Chinese assets, right? This is another asset class you can buy. It's an ETF. It's called the Golden Dragon China ETF. You can buy some of that, right? And so let's talk about here where I'm looking to get in on. Oh, also India. It's the same fashion, right? I like this area here, but now that we tried to pull back, but we couldn't. I would sit there and say, if it pulls back down to these levels here, come on. Potentially down into this, maybe we just exploded out of this. We could potentially come back down to here. So 53 to that 52 area here. We're sitting at that 54. So I like that 51 and 50 area as well as the 53 and 52 area. This is the Indian ETF iShares, which is basically INDA. And you can buy this ETF and just dollar cost average, you know. The other one is going to be the IRUS, and this here is Russia's stock market. I would expect to see a pullback again down to that. Down into this area, that 24, 26. This is, I know we had it. I don't know what happened here. ET. One second. I'll pull this up here real quick. Here it is. Asia. Not much. I'm just giving everybody things to make sure that their portfolio can be well diverse if things start to fall apart. Taiwan, South Korea, South Africa, India. I can hear you, buddy. Chile, this is America, it's Europe. Give me 1 second. Sweden. Thought I had ETF here. The Russians. Give me 1 second, let me pull this up. Two of the most popular market ETFs, boom, 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 the neck, and iShares. That's what it is. I thought it. ER. Let's go here real quick. US. That's the short. It's interesting. The only thing, you can't buy them unless you're short them. That is interesting. RSX. Huh. I was wondering, I thought I had. Yeah, things changed up here real quick. Well, there's an ETF, the Vanex Vector Russian ETF is RSX, and then the iShares Russian ETF is ERUS. So I can't pull them up on this, which is really interesting. The only thing I can literally pull up is to short the Russian market here, but I cannot actually buy the Russian market here for the ETFs, even though you can see here that ChatGPT says that you can. Trading suspended due to geopolitical tensions and sanctions. Many Russian ETFs, including RSX and ERUS, have faced trading halts or dead lists. Always check current funds status before investing. Okay, that explains a lot. Yep. So it looks like you cannot. Kind of frustrating. Alrighty. Alrighty. Okay, so at least you can take part in the PGJ, which is the Russian one, or the Chinese one. Let's go ahead and go right here real quick. Next. Alright, so let's check out some of these commodities here, and then we can play off of that. So actually, we'll first hit the dollar and then kind of go from there. So we saw this sell-off of coming from the dollar here. Earlier, we talked about how the dollar is depreciating based off of basically the world kind of losing trust in America for what we did to Russia by taking their assets. I think it was $500 billion, which was part of the sanctions in 2022. With that said, though, I do expect to see an increase because something can't just keep selling off. So we want to expect the US dollar to see it get up. Now, we've been watching kind of push up in from this level here. I'm going to remove that. And I'm going to expect to see a market pump here for the US dollar. We're going to do USDTX. You can expect to see a bit of a little pump here from this level. We got a few liquidity areas. The 1-0 mention posts. I'd expect to see a market 98,967 area here, or this is where the market is at. I expect to see the market get up to this 100 area, literally just simply because that's the next level of liquidity. And then from there, I would expect it to see it if a pullback at these levels here. So it looks something like this. See it kind of go up at these levels. Boom. By that time, we'll see the 200 period come down. Right here, we'll hit that. And then see it come back down. And then see it go back up to this level here. Now, here's the question. If Trump has the ability to really get things going with the job market and with everything else, as we hit that 200 period, we will have a sell-off, but we'll have a lower high, or excuse me, a higher low as the market rebounds off that higher low to see it go higher. So this is kind of a wait and see. Trump is really pushing hard on bringing investments back into America and seeing innovation here through tech as well as the energy sector. Now, I've talked about how the energy sector has laid off a lot of people in relationship to what's actually happening in a slowdown in the economy. But if we can see an uptick in the economy, our system is our financial system is built towards any type of innovation. You know, we can build off of anything in all reality because it's that diverse and it's very flexible. The only thing we can't build off of is no jobs. And so if he can create some jobs and get things up and running, we will see a big push. So it all is predicated on him. And I talked about from the very beginning of this year, from his inauguration, he has to bring in real jobs, i.e. manufacturing jobs. He's got to, because that is a 2.69 multiplier of every dollar spent. It produces literally 2.6 or 269% growth for us. So he's got to do that. And then everything else will kind of even itself out. Let's check out here as we start to see this. I'm going to create a demand here real quick as a pullback area. Sit there and play off of this here real quick. And I expect to see it push up. Truth is, man, I'm looking at this now. I would expect to see that area right there. No wick. We could see also a pullback to right here as well. Boom. So this is kind of like where I'm seeing we could pull back to that 97 area here on the USDX. And I have this marked up. I want to see the volume aspect behind this first, what I'm looking at. So when we go back to our chart here, I'm speaking about this area right here. That's really what I'm looking for. So we'll put this up here real quick. And then one right here. It's gonna be that area right there, so. I'm gonna remove this here. Already traded through that. All right. So here we go. As this market is moving, this is what I'm expecting to see. Like I said, it to go up into these levels, boom, then come back down, and then see it go up. Hopefully he can get the jobs up and running. Okay, next level here, I think it's important to be paying attention to is the yen. We're watching the yen start to show some strength here. In the market, literally because it's now being backed by gold, and the rest of the world is taking note here. Now, still, America holds the largest. I think the largest amount of gold. I think we have 6 tons, or roughly 6 tons, whereas I think the nearest competitor, and we actually checked this out a couple weeks ago here on the show. I think China has 3 tons, 4 tons. Give me 1 second. I don't know what happened to my debt clock. Let's try this again. Up here. There it is, US debt. Okay, so we can pull this up here real quick and check out how much gold the rest of the countries have. As hold, thank you. U.S. debt, did they take it off? India, Japan, China. By country in ounces. Let me make sure How much? That's what it was. I thought it was 4, but yeah, it was my bad. They hold about 2,200 or 2,300 metric tons of gold right now, whereas the U.S. holds about 6,000 metrics. So they have about half of what we have right. Oh, not half, but they're climbing, and so what they're trying to do is back up the yen with an actual real hard asset. And so you can see here they've been climbing. It's been gathering steam. So people have been starting to buy and transact in yen somewhat, and it's primarily in the actual BRIC nations. So this is heating up. Like when I say heating up, like I said, this is going to play out over the next 10 years. Right? So this isn't going to just be overnight, all of a sudden just be crazy. But it's something that we need to be paying attention to as we keep going. And me and Tom, hopefully by 10 years, we'll have like a couple 100,000 viewers, and it'll be fun. But to you 8 people that are watching us, thank you. Appreciate every one of you. Please hit the like and subscribe and share button. That always helps us out a lot. All right. So in relationship to the yen, we're seeing strength come into it. We're watching it really hold at these levels here. I'm actually going to remove this here.
That's right. I knew it was the internet. There's no way that modem was bad. I knew it. Like it's not, we just got a new modem. Can you hear me now, guys? You should be able to hear me.
Okay. Alrighty, so we were on the Chinese yen. If you're looking to take part in this trade, I would expect to see the yen kind of pull back to this area of the 7049 area and hit that 100-day period moving average. As they keep accumulating gold, they're going to keep accumulating people, well, that want to get out of the American system, the US dollar system. And so this is something that we need to pay attention to. Why is that not working? Come on, buddy. There we go. This area right here, though, you can see it come back down into that level and then go back up. So if you're looking to take a currency trade, this would be an epic pullback here for you guys down to that 7035 area. All right, so the next level or 7035 area. All right, so let's check out here real quick. I'm gonna jump in here. I'm gonna skip a lot of the other normal tech stocks here. Unless you guys want me to go over it, let me know. But I want to go over MicroStrategies because MicroStrategies has been selling off here. And there are some plays that I've talked about where you can actually take part in ETFs that play a strategy that they go through, and these ETFs go through and they buy call options, or they buy sell options. They buy or they sell. Actually, they buy, sell call options, and they buy put buy options. I know it sounds weird, but basically what they're doing is they're looking to receive premium for their options, and so that can act as a way to generate income, right, for your asset that they're doing. And so I'm waiting for MicroStrategies to actually come down to this lower level of that 2334 with this liquidity area, and potentially that 20 or 204 to take part in some of these assets. And give me 1 second, I want to make sure I say it right. I want to make sure I kind of show you guys this. Yeah, so they're called yield. It's called Yield Max, which is the ETFs that actually or the company that runs the ETFs. And the one that I was talking about is called the MSTR Options Income Strategy ETF. Ticker symbol is going to be MSTY. So I'm going to point this out here real quick. MSTY. And so you're like, Pedro, it's down. This is the reason why, like I said, is when you invest into it, you're looking to receive an income off of this play. And so what happens is, let's say you put $100,000 in, okay? And let's say you've put $100,000 at this level here of that $18 here that I marked. Well, here's the thing. We've been watching MicroStrategies go down, right? And I'm going to make sure we can go back and forth. For the last 3 months, we've been watching MicroStrategies go down, right? And so they play an option strategy based off of this. And what they do is they invest their money into MicroStrategies. And then out of that, they then go through and do these option plays. These option plays pay you a pretty good, they literally pay you a lot of times like 10, at least off of MicroStrategy, the MSTY, you put $100,000, they pay you out 10%, 8 to 10%, or monthly, not annually, but monthly, which based over an annual period can pay you out a substantial amount maybe 120% off of the initial pay. And so this is one of those things people are using as a strategy to actually receive income. And so what I'm trying to wait for is to go through and wait for a liquidity area. So here's one area like I'm looking at, which is basically that 131 area. And then we should see an increase in the value of MicroStrategies. Once we get down into this level here, 131 to that 204, I would expect to see a rebound and push back up once we come to this level based off what's happening with Bitcoin. And you can see here, with that said, with the MSTR strategy, ETF, or MSTY, I'm sorry, MSTY strategy, that as we're coming down into these levels here, over like at 200, it might jump back down to, let's say, $8, $8 to $10. And so I'm waiting for it to come down into these lower levels here so that I can take part in this ETF and then watch it go up. So not only am I going to get capital appreciation, but also I'm looking to get the income that correlates with that. Right. And I'm obviously not going to put a ton of money in. I maybe probably put in like $1,000 and see how it plays out here. But I think it'll be a good little play to see what happens. And I'm just going to play around with it. So just to give you guys heads up so you know what I'm looking to do. I want to point that out to you guys for that. And then we can do here real quick. NVIDIA. NVIDIA is still the darling of the stock market. And the reality is, why? Because it produces a really good system called, feeding the beast of AI through a lot of their stuff. Now, obviously, there's a lot of other technologies out there that are trying to circumvent just buying CPUs from NVIDIA, but it's a great company as it develops the hardware for AI. If we see a mass sell-off in the economy, right, and jobs and everything that correlate there, I would expect to see it to fall back down to that 153 area. Right now we're seeing that 195, 153 area is a good area that I'm looking at as a sell-off. In addition to that's that monthly 8 coming down. So if we did see a market sell-off or crash, this is the area that I'm looking to buy more of NVIDIA down at that level here. If you also look at Google is playing some hardball. They were making fun of the claims that OpenAI made about how genius of their AI was, literally because it basically went and did a really good Google search, and in doing that, it found some mathematical problems that supposedly could not get solved or had not been solved yet. And they had been around for, I think, up to 50 years. And so what happened was OpenAI went through and OpenAI went through all literature online and found literally a few research papers that actually solved those mathematical theorems, and then claimed, look, OpenAI solved these, ChatGPT solved these issues or solved some of these mathematical problems that have not been able to get solved. And then as they did more research into it, realized, no, it didn't solve it. It actually just went through, found actual people who solved it, but because their work had not been publicized, nobody knew about it. And so everybody thought that those problems were actually still, were still unsolved, and they actually were. So OpenAI basically got smacked down, and the CEO of Google basically was just like, dude, you guys are dorks. Like, I can't believe you actually was like, let that go without anybody even knowing about it. You didn't even, so anyways, it's this huge thing on Twitter about it. But Google, on the other hand, they've just been slowly, steadily just climbing. So Their AI is getting stronger. You can see what's actually happening with it if you use it at all. I like Gemini. It actually works pretty well. So I'm liking what we're seeing with Google. If we do see a pullback into it, expect us to go into that gap that we had a few months ago here. You can see here it's a pretty big gap up. So coming back down to that 226 to the 210 area as we come down would be a good place. Nice little pullback up. What would that be? 25, 12, and 25, 12. Why no? That'd be 10%. Why am I sitting there trying to do the long math? That'd be 10%. So 10% pullback down into that 50 period moving average, as well as stepping into the demand area here. So I would expect to see it kind of come back down and pull back into here. We saw this big pullback here back in April when everything sold off, and we saw it continue up. So a lot of people were able to take part in that 151 area pullback, which was pretty cool. Now let's go ahead and talk about Amazon. Oh my goodness, already 2. Dude, I can't believe it's already 2 right now. All right, let's move this here forward. Amazon, we're seeing it kind of pull back. Obviously, the tariff war has not done well for Amazon, and so we're watching it kind of pull back. Honestly, we saw the liquidity area kind of play off of here and saw a pullback. If there still keeps, every time there are talks of tariffs really stepping in, you see Amazon sell off even further. And so you're watching that lower high, lower low, potentially lower high, right? I think we probably might have one more. I think Trump is learning, like every time he talks about that, the market sells off. And so he knows that's people's retirement. So I think he's kind of learning kind of how Obama learned, not to talk junk about the market, because every time he does, the market sells off. In the same sense, we can watch here. If he does do it again, I am looking for the market kind of to sell off to that 197 to the 194 area here on Amazon as it pulls back into that level. Be a good place to pick up some Amazon, some AMZ. All right, next, Apple. Apple here had some good news, and we saw the market kind of pick up off of it. I'm honestly waiting for Apple to really release news on their AI. It's crazy to think that Apple, which was one of the founding tech companies that just built this entire industry, not have a real AI. Like you hear about what is it? Siri. Siri was their AI before AI really was a thing. And it was a big deal, right? You would talk to Siri and Siri would just help you out. But again, it was just a glorified search engine, which is kind of like what all of them are currently right now, right? But honestly, the lowest one out there is Apple. I mean, it's like if there was a 1 to 10 or 1 to 100, and the majority of the AIs are sitting at like 89, 90, 95. And then you have Apple and their AI sitting at maybe 20, maybe 15. So it's like, but they have a lot of stuff kind of coming out right now. We'll find out what's actually going to happen here. But they've got a cult-like following where people just buy their stuff and kind of leave it at that. They kind of stay within the Apple family system, and it makes life a lot easier for people. The only problem is Samsung is really, I'd rather buy a Samsung any day over an Apple product. So once they start to lose that cult-like following, it could come back down. Most likely it will. But they have so much money, so much reserve, and that they could literally be this way for the next 20 years. They literally have like $200-300 billion just in reserves, so they can pay their employee. Unless we start to have 25 to 30% inflation, which would eat away at the reserve on an annual basis, which very much could be. They still could last for another 10 years of not really being innovative. So really interesting to see what's actually going to happen here with Apple. All right, let's check out here real quick with Meta and Tesla. Tesla here has been actually kind of floundering here. I thought we were going to hit the new all-time highs here, but it actually pulled back. So it was really interesting. From a charting standpoint, I'm honestly looking at these lower levels here. If it does sell off into this area here, which is sitting around that 342 to the 328. We almost, when we were pulling back here in June, I thought we were going to come down and test that 49 area, but we didn't. Once we broke through that 200 period moving average, which was above us right here, we started to see it find support. It just went up from there. So I expect at the peak here, if it does make all-time highs, to hit some liquidity here and see a pullback. So this area here could be an area of a buy if you're looking to buy. Give me 1 second. As it pulls back. Give me 1 second here. All right, so this is the area that I'm really looking at for the market if it does pull back into that 402 area. And so you could actually take a couple calls, right? And don't do a naked call. Make sure you're smart about it. But you could take a couple contracts in this relationship here and be able to take part in that push up. Just make sure you understand options, the theta, the alpha, the beta, the gamma, all that other stuff that correlates with it. All right, guys. All right, cool. And then Meta has been getting so much play in the news cycle, literally for their glasses, but I think they're kind of overhyped. And obviously that's normal for AI, right? But I think they do have a huge market leap compared to all the other AI or other AI glasses out there. They have so much momentum going in that I'd expect to see them really kind of scale that. And so I think this sell-off here isn't bad at all. If it does continue, because we still got that 50 period moving average sitting right here, and that's basically a higher time frame weekly 8 sitting right above us. So this would act as some form of resistance here as we're coming up to it. If it does see a sell-off and we put in an additional lower high, which we had a lower low, then I would expect to see this thing come back down into this next level here, because we've already traded through all of this here. So the next level is going to be down in here. So I'd expect this area of that 620 area as a good buying point. And let's pull this up here. That was not the call I was trying to do. Alrighty. This should be the bottom of that month. Oh, no. That's where I want it. So this area here, I guess that 592 to the 570 is really kind of where I'm looking for a pullback off. I know it's a large pullback, but it's just one of those ones I would expect to see if it does, because there's nothing else to hold it once we break through this level. But as of right now, that 686 area is holding on the monthly 8. But if it doesn't hold, the next level is going to be down at this 592 area. All right, Netflix obviously has been just killing it. I mean, really killing it. I mean, they literally over, what is it? When was this? 2022? Back in COVID, they have just been literally screaming up. It's absolutely insanity to watch this. Look at this. And they were literally at, what is this? So I want to make sure I get it right here. Give me a second. That 162 area. Now, Netflix was sitting there, and it literally went from 160. I mean, we're talking 10x in 2 years. I mean, that's crazy. Actually, more than that. What is that? Probably 11x, which was, I think it would be 11x is what it's sitting at right now at its highs, right? When it was at its high, it was 11x, but it's about 10x now. I mean, that's just impressive, right? And I mean, I really don't have a Netflix account. I don't pay for one. I think it's just a waste of time for myself. But I know people like to, there's a term with this generation of like Netflix and chill, or like, you know, like the veg out on Netflix, and they call it like a mind rot type of thing. But, you know, people do that. I know one guy, he literally used to spend hours every day. He would get off of work and just watch Netflix. And I'm like, dude, go out and touch grass, go out and talk to people. And he would get in these like dopamine cycles. I would see it was almost like a drug for him. So I don't know. I say it like this, is that they've done something right in getting people addicted to their service here. And I mean, you know, there you go. That explains why. Now, I don't know if they're going to pull back. I think they will continue higher here. I mean, the only issue is this, is that we are watching some volume drop here. And so you can see here, volume starting to drop off. But even then, I mean, still had 3 months of just solid, you know, buyers. But if it does sell off, my first place I'm looking to be buying, honestly, is that 927 area to that 880 or that 854 area here. And then after that, if it sells off even further, the next level, honestly, is at that 488. I mean, it's literally had a parabolic run up, which is crazy. Okay, next, let's go ahead and go into crypto now. All you guys have been like, here, get to crypto. I'm here now. All right, so let's check out ETH here. ETH has been playing fun. Honestly, you can see here over the past few months, we've been kind of selling off here. Look at the volume. But then at the same time, if you look, right, we haven't really gone anywhere. We've kind of just been playing in between that 3,500 area into that 4,500 area here. And so we've kind of been just stagnating here. And I honestly, I think it's being suppressed by the institutions, because the institutions know, like, this is an asset that's going to be used. This blockchain is going to be an asset. It's going to be like, and we've talked about this multiple times here on the show, but blockchain will literally be like gold, will be like silver. Like, it will act as a digital asset, the blockchain itself, because you can utilize it to create fees. And so that in itself is what I think they're just trying to suppress it in between this area before they let it rally. We know that the liquidity is building up for institutions on the CME side. Like, if you go to the CME, you can actually see that volume on this. Give me 1 second. Has been bumping. And so I'm expecting to really see some big moves here, honestly, to tell you the truth, as we keep pushing off of ETH. I wonder also, when are they going to start kicking out on the CME these perpetual futures? Because the reality is this, is as we start to keep moving up, I expect it to keep just skyrocketing. I mean, in all reality. Give me 1 second. Oh, there we go. Boom. Yeah, I'm watching this stuff happen, and it's crazy to sit there and think that this market is like, it's just crazy that it's just skyrocketed. Especially when I'm looking at the CME of how many contracts. I mean, literally the last 4 months has been just record buying of these contracts on the CME. I mean, it's so, I think these levels here is literally indication of the institutions suppressing the price of ETH so they can buy in at this level before they let it get to 13,000, honestly, because you see the volume just pick up on the CME here. The other one that I thought was really interesting also is they pick up of SOL on the CME. SOL as in Solana. We'll go into that in just a second. Let's talk about BNB. So BNB hit the all-time highs here. We saw it pull back into our area here, and now we're starting to see it really kind of flounder, which is kind of what we kind of expected. I said expect to see it kind of come down into these lower levels here. Let's talk about this, that 8 period crossover on the 20. I'm honestly, like, I like this area down here, like that 920. If it picks up some steam, that 807 area is also another area that I expect to see us to hit that area here, and then see another continue up again. But if Bitcoin starts to get legs, expect it to go up. So the reason I'm giving these lower points, see if we have a flash crash or something happens of that nature, that would be where you want to be buying. But the next level here is honestly that one, like that 1000, 1020 area here. So I would expect to see some movement really pick up here. And I just saw, where was it? Anyways, so I like this area here. If you got the patience, right, you could capture it and wait for it to hit that 901. If not, you can take it short until we start to come down into that 10 or the 1020 area, or the 102 or the 1020 area. This is the area that I would expect to see a basically just the buyer step in, and it's at that 50 period moving average sitting right there. And so it's kind of clear where they're trying to take this market. Now, in addition to it, you have that weekly 8, but we've pierced this weekly 8 a couple times now already. And so this is where I'm expecting it to come down into this lower level, pull the liquidity off of here, and then for them to take it up. So that's about in a nutshell for ETH, or not ETH, but for BNB. Let's check out Solana here real quick, and then we'll go into XRP. And see right here on XRP. XRP has been really interesting because, yeah, they're selling off, but again, when you look at the institutional play on the CME, right, the volume on it has been picking up again. Like it's you know, it's not seeing trading, a huge trading volume, but what you are seeing is over the last few months, just an increase in it. And so somebody's buying XRP on the CME. They're going through and they're putting in their positions. So again, me looking at this, watching this market play at these levels here, it's just an indication of literally them going through. Actually, it'd be more like this over here. That's really all this level. This is the majority of the trading has been at these levels here. You can see you have like 1, 2, 3, 4, 5, 6, 7, 8. 9, 10, 11, 12, 13 out of maybe 1, 2, 3, 4, 5, 6, 7, 8, right? Like even right here, you have a huge portion right here. The institutions, this is where they're sitting right now. This is where they're suppressing XRP. Why am I saying XRP? Solana. There you sometimes I laugh at myself. Solana here, because the institutions are just literally just playing right here. Let's check XRP here real quick. XRP has been playing in a nice little zone here. As you see over the last couple of weeks, you can see that they're playing here off of that 50 period moving average sitting, which is the gray line right here. I think what's interesting here is that as we're watching XRP start to really kind of find support on that 400, what we want to see is we want to see an increase in volume on the weekly, right? We want to see, we've been watching the sellers get and take over, but if we see BTC pick up, expect to see XRP pick up, right? Because again, this is part of some of the strategic reserve, crypto reserve. So we want to make sure that we're paying attention to that. All right, the next level here is, where was it? TRX has been playing off our zone here over the last few weeks. We just kind of been picking off of that 30 cents, 29 cent area. I'm kind of waiting. This is another one that has a lot of transactions. They have a lot of transactions on their blockchain. So I would expect to see it really kind of pick up here. One of the areas that I would expect to see a bit of a sell-off once it hits is going to be the local high here. See it pull back and then continue up, because it'll be the first place first time it tests there. So if it does, we see the pullback, it'd be a good place to buy at that level. Again, not financial advice. Please do your own research. These are some of the levels that I'm looking at. Now, let's check out Dogecoin. Dogecoin has been really interesting because you have that massive sell-off. It literally went from, what was it, 27 cents all the way down to 9 cents. Okay, like literally losing 1/3 of its value there. And what was interesting is that within, I think it was in the day, it was in one day. Yeah, within one day, it literally pulled back to 19 cents and then started following the same. But you saw how we just broke that 8 period. And you can see here that the volume here, even though it's dead, right? Like I'm not saying it's huge, but you would expect to see a sell-off come in off of that. And we're holding off of that 8 period moving average, basically showing me that the market wants to rally on Doge, right? Somebody's buying it, somebody's keeping the market here. And honestly, I'm expecting to see the CME kind of come out with something with Doge, and maybe another futures, like we see with Solana, and like we're seeing with XRP and Ethereum. Honestly, I mean, why not, right? I mean, with what Elon Musk is doing, I wouldn't put it past, you know, them to try to change that or try to take advantage of that. And so again, I'm paying attention here real quick to what's happening here with Doge. I like this play here, that big sell-off all the way down to 9 cents and then rally hard, and now we're staying above that 8. So again, I'm paying attention to this. Hopefully you guys took part in. Actually, we need to remove all these sell-offs now. Boom. Because we pulled back to them already. Boom. Okay. Actually, I'm going to, we pulled, man, can you believe we pulled all the way back to October's low for Doge. Last year, look at this. Last year, we saw it go from 11 cents all the way up to 49 cents. Now it's a year later. I would expect the next level, we could see it hit that 76 cents, 70 cent area here at those highs. If we see it come in, right? It came down, took out the lows, pulled all that liquidity, and now they're holding it. That would be something that we would see pump. All right, next level. Let's check out ADA here. ADA's been acting really interesting. I've been waiting for this to get going, honestly. It's acting funny because there are people buying it. Like whenever they sell it, you can see here, like they'll buy it up here and then they get crushed by somebody. And this is playing similar to what we're watching with Doge as well as with TRX, right? We talked about TRX playing above that 8 period. ADA is in the same avenue here. Okay, we're not seeing a lot of volume coming here, but I honestly expect to see some news with TradFi coming out saying, oh, now we're going to do an ADA treasury or something of that nature. Because the reality is this should see a sell-off, and we're not. We should see it come down to that 57 area to that 54 area, or the 57 to 51 area here, and we're not. We're absolutely not. So it's that 57 to 51 area. We're kind of holding off of this level. So I would expect to see again another some form of rally if we see a Bitcoin rally off of ADA. Let's check out DOT. DOT was one of those ones that I was mad at that I didn't get at the lows. It hit the 97 cent, and I've been waiting. I mean, almost how long have I been waiting for that? I mean, legit, like 4 years. I won't say 4 years, but like I wanted to buy it at that one. Like I knew it was going to come down to there. I knew it, and I didn't. So I'm still kind of waiting for this. Oh, you totally scared me, bro. I was like, this is DOT. It was, man, mad at myself. I should have had, but again, Yeah, I should have had a bunch of limit orders sitting down there, right? I actually even did. I know I did. I put it, but they time out. I wish they wouldn't time out. That frustrates that your limit orders time out. I wish they wouldn't. Anyways, so, but again, this is similar than what we were watching with Doge. Is again, you're watching a slight amount of volume, but you're watching it creep above the 8, which means that somebody is putting a position, but they're putting their position in somewhere else as well. Again, I could be wrong here, but it would not shock me to sit there and see a CME futures for DOT. It wouldn't. I mean, I think many of these blockchains are going to become commodities because they literally are going to exchange the next they're going to be the road for the next financial system. And so there's going to be a lot of transaction. And I always say it like this. I told a woman one day, she was talking about crypto. She's like, oh, that crypto stuff, it's so silly. And I go, yeah, I don't disagree with you. There's a lot of silliness to it, She's like those meme coin things. And I said, yep. And then she talked about Trump. And I said, absolutely, I'm not disagreeing. But I go, remember when the internet first came out back in 2000? She looks at me, she goes, how old are you? And I go, I'm old enough to remember when I made the comment saying, why do I need an email address? I already have an address. And she goes, yes, I do remember that. I go, okay, so you see how old I am. And then I sit there and I say, but here's the thing. Would you have thought back in, 2015 that your life would be consumed, that you would be carrying, not 2015, excuse me, 1995 to 1990, why am I saying 1995? The year 2000. Why is that so hard for me? My brain is like not wanting to work. The year 2000 to like 98, 95, you would never thought that your life would be basically revolving around the internet. And she goes, yeah, absolutely not. I go, yet your work revolves around the internet. Your phone revolves around the internet. I go from here to across town to a place you don't know and pull out. And would you use, an actual map, or do you pull your phone out? She goes, obviously. And so I say that because blockchain is going to be like that. You know what I'm saying? And Tom talked about it this week, that you're not going to know blockchain, or I think it was last week, where it's like, you're not going to sit there and look at blockchain and go, oh, DOT. They're going to seamlessly interact with each other in the background. If you need to exchange this value to over here and move this over there, they'll have different blockchains for different speeds, and those will interact with each other. So it's going to be one of those things I really expect to see happen here. And DOT's going to be one of those ones because it's quick, it's efficient, it knows how to move things, and it's been around. And they've also been upgrading it, doing a great job. So that's why I think blockchain, from blockchain perspective, I think DOT is a good play. Now let's go ahead and do Shiba Inu. Shiba Inu, to all those guys who love Shiba Inu. Shiba Inu is playing the same market movement. Look at the buyers, yet we're still above the 8-period moving average. We're watching buyers step in again with the moving the wicks. They're all playing the same look. So I'm just expecting a type of move here. My good old boy right here, Trump's Treasury. World Liberty Financial Treasury for crude. That's funny. Sorry, I'm cracking at myself. We're still seeing a pullback here into that 9 cent. I think this will pull down. I think we'll see a sell-off in Crow simply because it's not above the 8-period moving average. We just sold through this zone here, and so I'm gonna remove that. Let's remove some of these lines here real quick. Here we go. I'm gonna make these flip zones. Oh, we already did. Flip zone came up, tap, pull back down. For Crow, again, I see this as a long-term play. Tom thinks that they're scamming everybody, which they may, but I think what's also part of this is that they do have a major ecosystem, and they are the on-ramp for many newbies to get on. Especially in America, you have, Coinbase and you have crypto.com. Everything else is kind of So I like crypto.com because it's really the on-base system, and people can use it simply by I talk to just newbies or just, TradFi / crypto I'm going to call them natives, but crypto holders. They are becoming, that what got them on was crypto.com and all the advertisements, especially that one year when they were really pushing off in the Super Bowl. All you saw was, crypto.com on the Super Bowl. So a lot of people use and have crypto.com not wallets, but accounts. So I don't think they're going anywhere. That's why I think accumulating it is not a bad thing. All right, so I've been going at this for almost 2.5 hours, going over everything in the market, and I need to have a bio break real quick. Or we can close this up. Yes. Dude, I'm shocked. We're actually up to 12. We've been ranging between 13 to 15, 16. I think we got up to 17 at the highest. So, yeah, hopefully you guys liked it. If you like what you see, please hit the like, subscribe button. I do a lot of what you see here, but typically Tom interacts with me, and there's much more banter. Yeah, typically a lot more banter, and it's a lot more fun instead of me just droning on about charts. But looks like you guys were liking it, so hey, maybe I should do some more of the charts and have more fun with it. So comments good here as well. All right, guys, thank you for coming in. We'll be here tomorrow. What's going on are you there all week? All right, excellent. So Tom will be here tomorrow. The normal bantering of us yelling at each other about news and other things, plus the traditional going over Bitcoin, as well as other markets and new things that are popping out in the DGen world as well. So that's about it in a nutshell. Come again tomorrow.